Welcome back to Investing Talk Podcast. Today we're focusing on Taiwan Semiconductor Manufacturing Company. You flagged some really interesting articles and reports about this major player, and we're going to unpack what makes them so significant in the semiconductor world.
Yes, we have a range of information here covering, their recent financial results, their strategic moves, and also how they fit into the broader industry picture. Our goal really is to get beyond just the headlines and understand what truly drives TSMC, especially given how fast things are changing in tech right now.
Okay, let's get right into the financials then. We've got some recent revenue numbers that sort of give us a snapshot of their current performance. So in the first quarter of 2025, they brought in NT $839.25 billion. That's a substantial, 41.6% increase compared to the same period last year.
A really big jump year on year.
But interestingly, there was a 3.4% decrease compared to the previous quarter. So what should we make of that? Strong yearly growth, but a slight quarterly dip.
Well, it's interesting seeing both figures. The significant year-on-year growth definitely suggests really powerful underlying demand for their advanced manufacturing. That kind of increase points to success in key growth areas. The small dip compared to the last quarter, though, that could be various things, maybe seasonal shifts in demand from big clients, or just minor adjustments in the wider electronics market. But the overall trend, the bigger picture, still looks very positive.
Right, and that positive trend seems to be reinforced when we look at the January through April 2025 numbers. Their revenue hit NT $388.82 billion.
Yeah.
That's up a hefty 43.5% from the same 4 months in 2024. And April 2025 on its own saw NT $349.57 billion in revenue. That's a jump of 48.1% year over year. That seems like an acceleration, doesn't it?
It certainly looks that way. I mean, if you consider the major tech forces play right now, AI getting more sophisticated, 5G rolling out, the whole Internet of Things expanding, all of these need the kind of cutting-edge chips that TSMC makes. So this accelerating revenue probably indicates that those demands are just getting even more intense.
Okay. And while we don't have the specific earnings per share figures right here, the strong revenue growth we're seeing usually translates to healthy profits, right? In fact, analysts seem to be anticipating around a 29% profit increase for TSMC in 2025.
That kind of projected profit growth is significant, and it's backed up by another important factor, their really robust free cash flow. This healthy cash generation is what allows TSMC to make those huge investments needed for new fabs, new plants, and pushing the tech boundaries.
Which leads us nicely to their position in the business and the industry overall. It's almost impossible to talk about semiconductor manufacturing without TSMC dominating the conversation. They control something like 60% of the global foundry market. That's just a massive share.
It's huge.
They're the main chip maker for giants like Apple and NVIDIA operating on that
fabless model, right, where they focus purely on the manufacturing side of things.
Exactly.
And their dominance isn't just luck, obviously. It's built on several key strengths. First, their technological leadership is just paramount. They consistently pour money into R&D. That lets them stay ahead in shrinking transistors, boosting performance. Then there's economies of scale. Their sheer size gives them cost efficiencies. Plus, they've built a very strong reputation, a strong brand, and they have a huge portfolio of patents protecting their innovations.
And this is where it gets really interesting with the broader trends. The rise of AI, 5G, IoT. It's not just abstract talk. It's directly creating massive demand for TSMC's most advanced chips. I read their AI-related revenue is projected to double in 2025, and that's after it apparently tripled in 2024. That growth is just astounding.
It is, and what's really notable about that AI revenue growth is how it highlights TSMC's crucial role. They aren't just, riding the wave. They are a key enabler of AI innovation, and they're actively pushing their manufacturing capabilities forward, moving into 3-nanometer production now, with 2-nanometer tech planned soon. That ensures they can keep meeting these intense demands.
And their ambitions aren't just staying in Taiwan. TSMC is making some really significant strategic investments globally. That massive $165 billion project in Arizona, that's a huge undertaking.
A very big deal.
And the news around these U.S. plants seems to be landing well with the market, boosting their stock.
Well, this move to build fabs in the U.S. and also planned ones in Japan and Europe, it seems like a dual strategy. Pursuing growth, yes, but also diversifying their geographic footprint. That diversification is probably aimed at reducing potential geopolitical risks and also making sure they have production capacity closer to key markets and R&D hubs. It's about supply chain resilience, too.
Of course, they aren't the only ones playing in this sandbox. we have to consider the competition. Samsung Electronics and Intel are the big names that spring to mind.
Right.
They're also investing heavily in their own manufacturing. But the information we have still suggests TSMC currently holds a lead, both in innovation and market share in the foundry space.
And it's fascinating to think about TSMC's position within the whole semiconductor ecosystem. Their strong relationships with key suppliers, especially ASML.
The lithography machines.
Exactly, the primary maker of those critical EUV lithography machines you need for the most advanced chips. That relationship just underscores how central TSMC is to the cutting edge.
Okay, now let's shift to how the market sees TSMC and what might drive their growth moving forward. It sounds like analysts are generally quite positive on the company, considering them a top pick in AI and semis.
Generally, yes. They point to the strong underlying business fundamentals and, interestingly, a stock valuation that some see as relatively attractive compared to certain peers, despite their leadership.
So what are the potential catalysts? What could push things even higher?
Well, several things. Continued strong demand for those advanced AI chips is probably number one. Then, the progress and, crucially, the successful execution of those big U.S. expansion plans that will be watched very closely. And, of course, their upcoming earnings reports will give more detail on performance and outlook. Oh, and the recent easing of some chip export restrictions could also help, potentially opening up more market opportunities.
But it's not all smooth sailing, is it? There are definitely risks, challenges to keep in mind.
Absolutely.
The geopolitical situation, especially between China and Taiwan,
Yeah.
that has to be a major concern, given TSMC's base.
That's probably the single biggest risk factor hanging over TSMC. Any serious escalation in regional tensions could have huge consequences for their operations and, honestly, for the entire global tech supply chain. Beyond that, the semiconductor industry itself is famously cyclical. It can have its ups and downs, periods of volatility.
Right.
Rising energy costs are another challenge for such energy-intensive manufacturing. And there's always the potential for weaker demand in big end markets like smartphones or PCs if those soften.
Okay, finally, let's touch on valuation. We didn't have specific PE or PV ratios in the materials, but it was noted that TSMC often trades at a higher valuation than the industry average.
That's common.
Which makes sense, I suppose. Given their market leadership and growth prospects, investors often pay a premium for that kind of quality and position.
That premium basically reflects the market's confidence in their ability to keep innovating and stay ahead. And while the specific dividend details weren't in our sources, the fact that they do pay a dividend can be an added attraction for some investors looking for income alongside growth.
So let's try to wrap this up. TSMC is showing really significant financial growth, holds this dominant position in a absolutely vital industry, an industry being fueled by huge tech trends like AI, and they're strategically expanding globally.
But those geopolitical factors and the natural ups and downs of the semiconductor market are definitely important things to weigh.
Right.
And the recent run-up in their stock price seems tied to those strong results we talked about, maybe some favorable regulatory news, and the market really recognizing their massive growth potential in advanced tech.
What's really striking to me is how this one company sits right at the nexus of so many global technology, supply chains, and innovations. It really makes you think about just how interconnected everything is in our modern world and the incredible strategic importance of semiconductor manufacturing. It's foundational.
It truly is. So we'd encourage you to dig deeper into TSMC's own financial reports. Keep an eye on how their global expansion efforts actually unfold. What are the real long-term effects of those big U.S. investments going to be? And how will they navigate that complex geopolitical stage? These are the critical questions to keep asking.
Definitely food for thought. If you found this analysis insightful, please do subscribe, like, and maybe leave us a comment. We always appreciate your engagement and look forward to exploring more topics that interest you in our future discussions.